Charlie Munger is often called the architect behind Warren Buffett's success at Berkshire Hathaway. He didn't trade aggressively like Jesse Livermore. He didn't take billion-dollar currency bets like George Soros. Instead, he mastered the art of thinking clearly. Munger believed that the biggest edge in investing isn't secret formulas. It's avoiding stupidity, keeping emotions in check, and using mental models from multiple disciplines to make better decisions. Today, let's study the timeless lessons of Charlie Munger, his mental models, his approach to opportunity, and the challenges he warned investors about. Principle 1. Invert. Always invert. Munger often said, "All I want to know is where I'm going to die, so I'll never go there." This is the principle of inversion. Instead of asking, "How do I succeed?" ask, "What mistakes would ruin me?" and avoid them. In investing, this means focusing not on hitting home runs, but on avoiding catastrophic losses. Lesson: success comes more from avoiding stupidity than chasing brilliance. Principle 2. Mental models across disciplines. Munger believed that to be a great investor, you must draw knowledge from many fields: economics, psychology, mathematics, biology, history. He called this a latticework of mental models. For example, psychology, understanding biases like overconfidence or herd behavior. Math, using probability to weigh risks. Biology, seeing how systems evolve and adapt. Lesson: don't limit yourself to financial knowledge. The best investors think broadly. Principle 3. The power of patience. Like Buffett, Munger emphasized patience. He said, "The big money is not in the buying or the selling, but in the waiting." His challenge to modern investors was resisting the urge to act constantly. In his view, the market rewards those who can sit still until a truly great opportunity appears. Lesson: opportunities are rare. Wait for them, then bet big. Case study: Coca-Cola investment. In 1988, Berkshire Hathaway bought over $1 billion of Coca-Cola stock. Why? Because Munger and Buffett saw a company with global brand power, pricing strength, and growth potential. It wasn't a complex calculation. It was a clear mental model. Buy great businesses at fair prices and hold them for decades. That single decision generated billions for Berkshire shareholders. Lesson: simple, obvious opportunities, when backed by patience, can change everything. Principle 4. Margin of safety. Borrowed from Benjamin Graham, Munger stressed always leaving room for error. No matter how confident you are, things can go wrong. A margin of safety protects you when reality doesn't match expectations. Lesson: never stretch for returns. Build safety into every investment. Principle 5. The psychology of human misjudgment. Munger was obsessed with understanding human behavior. He cataloged dozens of biases that cause investors to make mistakes. Confirmation bias, seeing only what you want to believe. Social proof, following the crowd. Loss aversion, fearing losses more than valuing gains. Overconfidence, thinking you're smarter than you are. He argued that mastering psychology is more important than mastering spreadsheets. Lesson: know your biases, or they'll control you. Challenges and contradictions. Munger also admitted challenges. Patience is hard. Most investors hate waiting. Inversion requires humility. Few people like admitting ignorance. Mental models demand lifelong learning, something most stop doing after school. But he believed facing these challenges separates average investors from great ones. Principle 6. The power of compounding knowledge. Munger often said, "Go to bed a little smarter each day." His strategy wasn't chasing trends. It was building knowledge over decades. Just as money compounds, so does wisdom. Lesson: read, learn, reflect. The earlier you start, the more it pays. Key takeaways from Charlie Munger. Charlie Munger's investing philosophy can be summarized in 6 rules. Invert problems. Avoid stupidity. Use mental models from multiple disciplines. Be patient. Wait for fat pitches. Always insist on a margin of safety. Master psychology. Know your biases. Compound knowledge daily. Outro. Call to action. Charlie Munger proved that clear thinking is the ultimate edge in markets. You don't need to be a genius. You just need discipline, patience, and the humility to keep learning. If you found these lessons useful, subscribe to the Wealth Blueprint for more timeless strategies from the greatest investors and traders of all time. Because in investing, as Munger showed us, avoiding mistakes is often more important than chasing perfection.